Hi everyone, this is video 1 of 3. We have about, I forgot, 115, 110, 114, something like that. We have a lot of tickers we want to cover. Do look for the video tonight. It's going to be a strategy video, probably late. Let's see how the futures open. And we are going to start and go down the list alphabetically. I'm not going to cover the indices here, because that's what the other video is for. This is just for companies that you have asked for. Okay. And if I fail to mention look for the earnings, we're going into another earnings season. Today is 10/20. Wow, where did the year go? This here is not an obvious entry point. It just had earnings, I believe, and giant big red candle. So for the next few weeks, or a few days, I should say, look for the edges of that red candle. If we lose the bottom end of it, we can come down to 37 or 36. Meanwhile, it looks difficult to take out the top. If you look left, it's been difficult for quite a bit of time. And that is the yearly look. And this is up close. You can see that 43.5 or higher is going to be a challenge. Meanwhile, they are buying dips. Let's see how much confidence they have. If they lose 37-ish, they might lose another $4 roughly. So if you're looking to go long, there's no rush while it's under this big cloud. This is Alcoa. American Airlines, I don't understand the airline spikes. Something must have changed in the world that now says they're profitable businesses or something. But if you look left, this has been a challenge. Like they fell apart from here. So the easy work up that I can explain from a technical perspective, this here is a target zone, more so than a starting zone. So this looks like a better short than a long up here, at least down to 12.4 or 12.3. Apple, if you've been in the live room or you've heard me say something about it, it seems like in the last 3 weeks, there are famous people that are saying exactly the same words and targeting the number 240, and I mentioned it, and it did push up to it. That was a couple weeks ago. So we weren't blind. We were not blind to the potential rally. It is still the top 3 company in the world. It is still an amazing business. I think it's a dying business for as long as Tim Cook is on the helm, at the helm. It's not so much dying like it's not selling its products, because everybody else is running 100 miles an hour and they're just jogging. Technically, 234 is important to hold. So if they can hold 234, they can not only meet 240, but they can beat it by a mile. So if the markets are higher in the future, this one could go to 250, not just 240. Starting point wise, I mean, you can, depends on your goals. Suboptimal to get long here. This is an all-time high. Last week, it just beep right above the all-time high. And now we have 3 pokes at it. So this week, if we have a positive reaction to the earnings of the mega caps, we have a few companies reporting, then this one can go much higher than 240. Meanwhile, for me, it's a why now question. AbbVie, they need to recover 192. It looks like it's dangerous that if they don't, they might drift down to 180. So this one could be heading towards the support zone that is around 180. 10 days earnings. Adobe, I thought it was a buy, and it was for a small dip, pop. It's reapproaching that same buy zone. So to me, that is okay to get long for a trade. As an investor, if I got in here, I don't add here. If I'm looking to invest for the long term, I will take half of a position and then not add until it loses 410. 410, yeah, until it loses 410. I don't know when that will happen, but if I'm an investor for the long term, right, patience is part of it. I invest half here, and if it loses 410 significantly, that means the market has crashed. Then I'll add the second half and I'll forget about it. So selling puts would work, but this is a pretty big stock. Not a lot of people can do that. I don't know how many shares you're looking to allocate. If more than 100, I would rather sell puts than buy shares right here. Okay, support zone everywhere. Immediate support is the bounce from 486, backup support 456 and 436. Easy round numbers. ADM needs to get back to 58. If not, then you're probably going to end up at 52 or 53, which is a heavy line of support. That red line I didn't draw. That's the heaviest volume spot, which is around 53.50. Let me zoom out and see if that adjusts. Still the same. So it's heading into support zone, but I don't know anything about the business, and I'm wondering why this is happening. Oh, earnings in 2 days. Ooh-wee. Okay, so the complete coin flip outcome. I wouldn't, somebody said here, and I forgot who it was and which tickers, but they said something about investing the earnings. That is not an investment. The trade on the earnings is an absolute coin flip trade, complete gambling. If you're looking to make immediate investment, please use a different word. That is not investing on the earnings. So technically challenged, you might get a wild reaction that could help you or break you. ALAB, I take it on good word. It's a great company to be long. I'm scared of the technicals. If I look left, this is absolutely not the place to get long, but the people interested in it, I respect their opinions. So if I'm long, I stay long. If I'm looking to get long, I would only take half. For me, I wouldn't. From a chart, not looking at its future business or anything, I wouldn't get long here. If I look left, then I have no reasons to get engaged starting here. If you want to trade the channel, a small dip to 63 or 60 would be a much better starting point. Ideally below 60, because that's the breakout right here. But I don't know their fundamentals, pretty wacky P&L, but I have a feeling this is about future. What is it? Okay, semiconductor. So maybe it's a buyout candidate. I'm not sure. This is a trading buy to dip for a bounce back towards 100 or a failed bounce that takes it to 88 or 89. 88 is a better support zone, better entry. So I guess what I'm saying, we have an ascending channel. You can see it. Oh, where are my lines? Okay, so it hit the target, now it bounced. So you see the ascending channel since our bounce. And now the question is, are they buying dips like this one, where they bounce and make a higher high? Dip, bounce and make a higher high? Or are they starting something that they cannot bounce from until they hit a lower low? So there's no evidence of that. There's plenty of support below. It depends on your goals. So be aware of this potential that could get you here. So this would be a better starting point. Earnings in 2.5 weeks or so. Support zone. So I wouldn't short it. I'm just telling you that this rally might fade and you might get better entry points. Align Technology. This should be a base. They lost the base up here around 256. To be honest, I don't know why they're not doing any better. Their competition is gone. Earnings in 3 days. This is an old note. I don't know what that is. So let's delete it. I mean, this is a long-term base. You have a huge bounce from here, a huge bounce from here. Now, let's put it this way. Let's put an alert down here for me. If it comes down below 190, I'd be interested unless they lose it, and then it goes down to the 2 digits in a series of lower lows and lower highs. So clearly this is a support zone that is buyable for a trade or a partial investment. And earnings, I don't know what that's going to do. Okay, let's see, who is this? AMD. All right, so let's take out the lines and see. This is not an obvious entry point. This red W has more downside. This is first target. Target 2 is 144-ish. So not every one of those plays out 100%. It does have support. So there is reasons to expect it holding. But there's also, for the same reasons, similar setup of resistance at 164. So The rally to 165 might fail and produce a lower low. Might. I'm not sure. Earnings in 9 days. I would not want to invest in AMD. I would rather invest in NVIDIA at this point. But it is tradable. They are buying dips and making higher highs. Amazon, I would not start an investment here. I just saw an article, and apparently it's one of the 2 most bought stocks, Meta and Amazon. I get the Meta. I don't get the Amazon. It may have hit scale, like problems of scale. It's a beast. Love this company. Not sure that this is an obvious entry point for a leap higher. If the markets are higher in the future, I'm confident this one will be as well. So if I'm invested, I'm not like bailing on it. But if I'm looking to invest, I wouldn't go all in here. I would wait for better entry points. Candidate for selling put synthetic stock. Selling a put, buying a call spread of sorts in order to finance. Reach out for details if you want. Buy the dip, yes, absolutely. Support, yes, throughout 181. But if you trigger losing those orange lines will come into play. And there are supports everywhere. The target was hit. The resistance isn't what they're fighting for. The red marks are still there. They hit our target, and now they're into the letter R's, and that's what they're fighting for. And there's even shortable levels up top for trades. Arista, buy the dip. Buy the dip. Look at this P&L. They don't make them better than this. They're just picture perfect. So what's with this, Nick? Okay, so I drew this potential target. It's not a path. It's something that the bulls need to be aware of. There could be a little drift lower towards 388. If you're okay with that, then just be long. Or buy the dip. I meant to buy this dip. It was just too dang fast for me to react to it. By the time I was doing whatever I was doing that day, boing, it had gone right back up. So put an alert. I put one for myself to next time it falls to buy the dip, because there's no reason to ever ditch this stock that has a P&L like this. This is pristine. Check this out. Consistency year over year, consistency quarter over quarter. Look at the profitability levels. It's just amazing. So chasing it up here, if I'm already long, I'm not adding. If I want to get engaged for the long term, I'll just take 20% of my allotment now. ARM, as exciting, but not as pretty as far as the P&L. The gross margin is unbeatable. I've never seen a company with better. But operational costs are huge, and I don't understand that part, and that's the part that spooks me. But I will buy dip on this stock every time, and we have. Let's see here. Technically speaking, it's an ascending channel, but from a crash, which is inexplicable. And notice the neckline that started all of it. It was around 157, 158, 156 right there. So that's what they're dealing with. If you can't see it, it's this head and shoulders right here. Let's put it in a weird color so it stick out. And so this zone is a problem. And that's what they're dealing with right now. You can declare a clean win above 165. And then it could go probably to 182. Until then, I would love to buy the dip into this nice ascending channel. So there is plenty of support below 141. So set an alert to buy dips. I will here. And I'll put one down here for market crash. ASML. Remember that some stocks fall through no fault of their own. So you would think, oh, it will never fall. Okay, so someone said, oh, ASML will never take this white path that we drew a while back. And here it is. It took a long time, but it got there. And I probably said, I don't think it should go there unless there is blah, 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 blah. And here we are. So it hit my target perfectly. And when it fell, they released the earnings. The earnings were not bad. The expectations were through the roof. So now the problem is, how can they recover 760 on ASML? Is it a catchable knife? Yes, the P&L is decent. And the way I would do it through a credit put spread, I would say selling puts, but that is a massive stock. And very few people can sell naked puts on $800 stocks. So is there a path lower? I can justify losing 600 in a series of lower lows and lower highs. How? Look at it. There is a series of lower lows and lower highs, and if they're selling every rally, I'm not saying they will, but it just happened. Why not again? So be open to a path like this. Be open to it. That's not my path. Let's say it recovers and the market's correct. This is already weak. It'll come down. If I'm long, I'm not adding. I don't know much about this company. So the chart is deciding whether it wants to go to 18 or 26. It does have support at 20, plus or minus, but I can see it falling to 19 with no issues. So resistance starting at 24 and higher. 116 days until earnings. What kind of wizardry is that? Isn't it every quarter? So how do I have 4 months here? Look into that junk. Anyway, that's my 2 cents. Space Mobile? What the heck? What is this? Okay, we'll go with that. No income, all spending. I don't know what to tell you. Okay, 27 is important, 26 is important. It could be heading to 33, but you have to cut through all the resistance that starts at 31. Broadcom, I would buy the dip in the stock. It's a big guy in the S&P. Right here is not an obvious entry point for obvious reasons. You look left, it's been not happy up here before. That doesn't mean it can't break out. In fact, every failing point is the mother of all breakouts, right? Higher lows knocking on the same roof. When they break through the roof, they go to 212 and 216. Until then, this yellow path is still potentially doable. This big, this W is actually an ABCD harmonic here. I don't like those, but it does kind of look like a W. Let's just say, if the market's correct, this one can be at 164. Would that be fair? That would be fair. Plenty of support. 172 and lower. Plenty of support. Plenty of fundamentals to fuel any rallies from here. 174. Pretty good, strong bounce. Lose it, you end up at 166. Pretty strong bounce potential. Lose that, you get it to 154. Definitely buyable with confidence. Okay. Thanks for the information on that other company, ASTS, some sort of a satellite communication. Cellular space-based. Okay. So basically, Elon Musk marries T-Mobile. Got it. Boeing. So it was a buy the dip moment, but is it now? I'm not so sure. They lost a neckline that's pretty important to hold. You remember the comments about the purple lines? Oh, it's so tight, something is happening. It falls apart like the next day or two. So now they were going to work really, 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 really hard to take back 165. Until then, they're stuck here or lower. So let's just say for giggles, the market's correct. This one can test the low 100s, and I will be a buyer for sure. So every time I got long Boeing under 120, somehow selling puts, buying a call spread or a combination, I made money. So I'm waiting for that. How will it get there? Let's say the market's correct. This one is vulnerable. It's already lost a lot of support. So there's plenty of support here for an investment. So somebody starting an investment for the long term and you take half of a position, that's fine. Don't add the second half until it loses 100 or goes down to the low 100s. What will get it there? I have no idea, but problems come out of nowhere. BABA was a short, and I'm happy about that. I am still short FXI, which essentially I'm short BABA and any other Chinese company. I think China's economy is in deep trouble. When they admit to only 5% growth means that they're probably shrinking. And this rally was stupidity like the high heaven. I cannot... yeah, maybe. I cannot... I don't understand people, really smart people buying it up here. So it went from point A to point B, and now it's back about halfway. So one would think that this would be a resting spot, Fibonacci and all. But I cannot stand behind any of these Swiss cheese candles. There's just no way. Okay, they've been traded around before, and it's just not for me. Let's zoom in. You might bounce to 108. If I got long at 110 and it gets back up to 108, I'm out. But that's the kind of mentality I would be in. If I'm short, and I am, and I stay in. So I bought puts, which I shared for $175. I've sold almost $100. I forgot the numbers. Let's see, 18, 21, and another 18. So now my cost basis is super low, and my puts are not red, they're greenish. So I can afford to be still short this stock, FXI, which is essentially this. I wouldn't start shorting here, but if I'm long, I would be looking for exits, not entries. Bungie. Don't know why it fell. Look into it. Let's see if we can find some support. Ooh, that's nasty. All right, so you look left. This was a buy the dip moment. I'll put it on my list. I don't know anything about it. So if any of you want to educate me on what happened here, maybe we can buy the dip. So the opportunity is a bounce back to 94, 95, 96. The problem is that could be a huge problem to overcome. And you definitely do not want to lose 86 because I cannot tell you how low it would go. BITO, not an obvious entry point, but yeah, we got some good jokes here. Let's see. I heard about Boeing being one of the few large publicly traded chains for Starlinks. Okay, speculation on Boeing. Yeah, you can always speculate on Boeing. Luckily, it has a business that supports the idea of using the trade for itself only. Okay, who is this now? BITO. So crypto has been deciding whether it wants to go to 100,000 or 40,000. And that's been going on for about 2.5 months maybe. And I'm a fan of crypto, and I wouldn't start here. I think the fight is still going on, and now the rubber band is about to snap up or down. I'm not sure. If you want to get engaged for the long term, you want to buy 100 shares out of 1,000 now. There's no problem with that. They have been very consistent with paying dividends, although I wouldn't consider it a dividend play because it's not consistent. Sometimes it's 10 cents, sometimes it's $2. So you have to pick you get what you pay for, a lot of volatility. And it is not the price of Bitcoin, and they just trade Bitcoin futures and they reward you if they do well. That's basically what it is. Go read the prospectus. They changed it a couple times. Boyle. Somebody said they want to trade Boyle. They think natural gas is going to go up. I don't disagree. It is tradable, but I prefer the other one, UNG. Boyle is too. It's an accelerated ETF. I'd rather go with ones that are not. So I think I personally would not touch Boyle. I would do the UNG. And it's concerning that this one looks like it may have triggered. No, barely. So let me go take a peek at the other one. See, this one looks like a better ticker. It's just better. I don't like to give Wall Street any reasons to hide something from me. And when it's a pro shares ultra, that ultra word, that means everything is accelerated. So how do they do that? And why does it not behave like the parent? Exactly. Okay, you can see how Boyle is testing the lows where UNG hasn't. That's weird. So I stay away from that one. This is a mind blower right there. I don't get it. The report was meh at best, and it exploded last week on the back of other banks and its own. So if you fell asleep at the wheel, it went from green to super red. And I fell asleep on my trade. Luckily, it was not large. So I still have a few weeks for it to play out. So if the question is about the trade is extremely red because of an extreme spike that I haven't seen in the stock before. I guess this was another time it's done that before. Nothing is justifiable from the P&L that I saw versus the expectations, but it is what it is. It's a breakout. I wouldn't start longs if that's what you're asking for, and if you want to short it, if you haven't tried yet, fine. I'm thinking I want to add to my position one time and then stop out. I'll decide on that this week. If you want to discuss it in details, pop into the live room. We will discuss triage. Car. Who is this? Avis. I hate this industry, like with a passion as a consumer. Look at this nice flat top. 91, basically. You take out 91, you can probably get to 102. Until then, that whole zone, 86 to 91, 85 to 91, is going to be super difficult to overcome. And the opposite is not as difficult to lose, although it is support, but it is spread all the way down to 66. Caterpillar, an extremely great company. We are short, and it's behaving exactly as we shorted. When I shorted it, I said, I don't know if it's going to fall. I respect its business, so I would rather short it by selling a call. And I did that, and I told you that either it does this or it does it from up here, and it went to exactly up here. And now it's between the two. So the short is working in the sense where we're up here. So I don't need it to drop for me to make money. I just need it not to go above there. So we'll see. Manage it according to your risk appetite. This is a great company, P&L, and I think it's recession proof too. We'll see. As far as if we're going long the stock, on dips, of course, you have support spread out through 360. So then it becomes a matter of how fast you want to trade it or invest in it. CareDex, I don't know what this is. Pretty ugly P&L. Okay, so this stock lost 28 and 27. They were important zones. And 26, that's pretty scary. If it doesn't get back up to 26, it's probably going to go to 19 or 20 to test this area. So sell the rally mode here. CELH, I love the fact that it went back to 38. Anybody stuck in it, I probably would have bailed on it up here if I owned shares. Good bounce, but it's done that before, and it's produced lower lows. This one looks a little different. So for as long as it's holding 32, it has a chance at recovering and beating 37. So if I'm an investor, nothing to do other than sit and watch my investment recover. If I added, and this is break even for me, I personally, I would get out personally. Charge point. Yeah, see, I would never touch these companies. This is a charging station business. Yeah, for an industry that lied to me flat out, and the government that supported the lie, I would walk away from that whole industry and never look at it again. Technically speaking, you have a nice floor, and you have a huge problem, 2 problems, 3 problems. So take out problem $1, $1.50, maybe you tackle 2, and take out 2, you tackle 3, and don't dare lose the support. Cigna. Oof. What happened? Okay, so if it was an industry I would touch, I wouldn't, because of Humana and UNH and all of that. I would never touch this industry. You need to know this business inside and out. And me being an options trader, I want the least number of variables, and this one has variables I cannot control. Technically speaking, anything above 320 is, anything around 320 is super strong support. Oh, great. Yeah, Rod. Thanks, Rod. It's a no touch for me, but this chart shows a lot of support below 320. So if you're buying the dip there and you want to sell puts to own shares there, that's fine. It's a nice trend, though, if you take it on the long term. So it's worth messing with. Coin, no touch. So these bulls need to recover this zone for control. That was an old comment, and they never did, and that's why they went all the way to here. You know why they went from here to here? Bitcoin. So why mess with a company where its stock is extremely dependent on something that's so wild as Bitcoin? Yeah, Bitcoin is going to the moon, but this one is going to follow the stock market and Bitcoin. So if Bitcoin falls, it falls. Let's say Bitcoin doesn't fall and the stock market falls, it falls. So this one has extra variables. I would rather pass on that investment. Let me see their P&L stabilize a little bit, and then I'll tell you, okay, it's investable. But this wildness is not for me. So maybe it's about whether you're investing or trading. If you're trading, this is not an obvious entry point just because of this comment and whatever else you're coming into. If Bitcoin goes to 100,000, this one may be 300. I don't know. So it's too wild for my taste. And technically, it's not an obvious entry point. Coke. And the person that asked for it said they don't want KO, they want this one. All right. Lose 1252, you go to 1160 in a series of lower lows and lower highs. Take out 1330, which looks difficult, then you go to 1380. CRM, great company, not an obvious entry point. Look at the letter R they went into. Great breakout, resistance zone, they chopped right through it. Amazing. Solid performance. In the process, now you build a super strong base. So falling into 272 or lower makes it a viable opportunity. Being up here, I think I'm late to the party if I'm just starting out. If it goes higher from here, it's going to have to do it without my money. 280, 282, 274 are areas of interest. Actually, not typical. All of these candles have been closed up nicely. So I'm going to have to do some maneuver in here to find one. Maybe here. Anyway, nice rally. CrowdStrike, nice rebound. Too nice for my taste. I think getting into this yellow box and coming out of it are two different things. So I understand people that bought the dip. But if I bought the dip and I'm still not out, then I'm an investor for all time, because you would have gotten like a 40 to 60% reward. And so what do you want? What is your expectation? So it went back to normal, and normal was super high. So what's the goal? Make sure you define the goal. For me, I would have been out. Re-engage when at 270. It may come back there. So we'll see how that happens. A lot of resistance from here on out. It's one thing to not have liabilities. It's another thing to get a pass and make a higher high. But this is an idiotic Wall Street. So you do your homework. And the P&L is not that great. I mean, the sales path is not that bad, but the profitability isn't. I have better companies to chase from an investment perspective. How about that? Cisco, look left, and this is not a starting point. It's an old dinosaur. Kudos, it's been here for so long. Very stable. I'm looking at the quarterly. Hopefully this is a pattern of recovery and increased sales quarter over quarter. If not, like quarter four and quarter four, year over year is lower. You don't want that. Look at the net shrinking as well. Hopefully this is a trend that could help it recover that glory. Technically, definitely a no touch for me up here. Earnings are coming soon too. So be careful, 24 days. Wow, that is an amazing, like, what justifies this? I would love to see the justification of somebody investing in it up here. There's nothing in here, maybe something in the write-ups. It just boggles my mind every time somebody does this in a stock like this. And I'll tell you, if they take out 58, they go to 62 or 3, and people will be laughing. But this is not the type of P&L that would inspire such a momentum stock. Anyway, it's definitely not for me up here. Chevron, man, I'm like a broken record. Not for me, not for me, not for me. Not for me. Whatever this red line is we're going back into it. In fact, I can move this red line and put it here, but I'm not going to, because I have this one. So anything between these two lines should be so difficult to overcome from a boring company like this one. Boring is good. Consistent, cranker, money, dividends, and everything, great management. But oil should be higher, and when it spiked, this one is struggling. I think it's underperforming because some sort of a buyout, merger, something like this, whereas Exxon stock is behaving better, had been behaving better. So it's just not for me. You can own it for the long term, and if you have a good entry price, the dividend will make it attractive over a number of years. You would basically end up being free. 5-year horizon is not long enough to start here for me. I mean, where's the fire? It's going into a huge resistance zone. So maybe 20% of the allotment for 5 years, maybe. Like if somebody wants to build a position over 5 years. I pounded the table during the pandemic. It and Exxon, they were so cheap. I said, own it for a lifetime. Just buy your stocks and own it for a lifetime. And those would have been excellent entry points. But they were in the 40s, not up here. So let's zoom out. Maybe I'm remembering wrong. No, they were in the 40s. I wasn't wrong. That was the buy of a lifetime. I said both, either or both. So up here, look at it. Pandemic, okay. Prior to pandemic, and now. I mean, that's better than Apple. No, not really. But it's better than a lot of companies in relation to their pandemic. Way better than Nike. Way better. Nike is down here. So it's really weird world of investing these days. Honestly, Wall Street has changed so much. So I don't want to keep you out of it. Just don't go all in. Great company. Datadog. We bought the dip up here. I'm definitely not in it. I will buy the dip. Where? I don't know. 120 or lower. Look left. There's a lot of scars to overcome. Prior fails. So great trend. Buying dips into whatever lines, areas that look of interest to you. To me, 122, 123. See potential sellers, that's clearly a buying zone now. So it'll be now supports zone. They overcame this blue box, which was one candle zone of one reaction back in August. Who is this again? Datadog. That is wild. They cleared it. That's why I said sellers. They cleared it like it wasn't there. So wrong. And P&L is good. Okay. Good growth year over year. There's no weakness on a quarterly basis. So buy the dip mode here into the support. I wouldn't touch anything that has dollar in its name because it's a lie. And the name of the company is a lie. You cannot buy stuff for $1 in there. So when will it be the time where they go, oh yeah, we're going to change our name to Bargain Bin or something? It's inside of a support. It seems like they're defending 79, 80 or lower with their life. And that's the key point, defending it with their life. What happens when they lose 79? I have no idea. So I would not want to be engaged. If I'm stuck in it, I would be looking for ways out. Okay, the Dow, I said I'll do a video about those later. This is a target, technically, and this is a place where it can fall. But the Dow is maneuvered, it is manipulated with one of a handful of stocks. If you tell me JP Morgan is going to continue higher, the Dow is going to spike. UNH all by itself will move the Dow miles. CRM, any one of those stocks can make or break the Dow. So I personally don't invest in it. I will end up shorting it big time. I could do it here, but I think I'm short the Dow, but again, via a sold call out in time. I'm not moving on that. And I will manage it and double it until I get out winner out of it. Buying puts maybe also can work, but do it a put spread, maybe a put butterfly of sorts to make it a small out-of-pocket expense. If you're asking to go long, please go long. The market is going to high heaven. They're ignoring world war fears, and the VIX is under 18. So go for it. I'm not going to stop you, but I wouldn't do it in my money. Disney, not a good starting point. Great company, great management, good CEO from Chipotle. I think the expectations are super high for what he can do. Wait, we're talking Starbucks. Wrong one. Good company, good assets, one of the best set of assets. Everybody knows all their movies everywhere on the planet. The problem is the chart, you look left, a huge problem going into 100. It's a psychological number, 3 digits, big chunk of failures. Bigger chunk of failures is just not a good starting point. It looks like a cup and handle. I think the breakout was lower, and this is about the target of that breakout. If you twist my arm, I would sell a call spread or buy a put spread. And this area that says weak it's on the way down if we ever get to it. So it's not that critical now what it says there. So I think too much resistance for me to start longs. And with that, we end the first set. 2 more to go.